Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. Going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and pull up that report. We can read the synopsis on top. In what has become a Thanksgiving tradition, the U.S. dollar is weakening, which is likely to carry through to December. So let's scroll down and read the synopsis on the euro dollar. The euro dollar could still drop below 123.30 in order to complete a fifth wave within a five-wave decline from 160.40. Although that's not likely at this point, it's just as probable, however, that the pair pushes through 133.02 in a larger recovery. So again, and as he says, bottom line, the euro-dollar remains in a range, so trade accordingly. We'll get to that chart in just a moment. Dollar-yen, not much has changed. I maintain that the larger dollar-yen trend is down, so strength should be sold. However, it remains unclear whether or not the rally from 90.86 is complete. So we'll get to that as well once I do bring up the charts. And the pound-dollar altering the structure slightly. The rally from 145.54 is probably wave 4 of 3 within a 5-wave decline from 211.60. Significant resistance does not begin until 160. And as Jamie was mentioning yesterday, he's very bullish on the pound dollar. So let's go ahead and pull up the charts. The first chart is the euro dollar. If you recall, in yesterday's report, I mentioned that we might use the very simple support line to possibly enter trade, and we can see here that prices did rebound off the shorter-term support line, and this is a good example here of what the short-term technical levels mean. So here we have, let me get rid of the other lines here to make this a little more clearer to see. What we have here is the simple support line on the hourly chart, and I want to zoom in really closely here. I personally entered on this candle right here. I believe my print was about 129.52 was my entry. Just a little bit above the support line. I then did exit for about a 40 pip gain, again, because it was 4 a.m. and I don't like to trade at that time. I don't like to hold into the European Open, into the London Open, only because, again, as I mentioned yesterday, chances for reversal are higher. So, and then there was a bounce, again, because I capitalized on that initial bounce off the level, but then the level did eventually fail, confirmed by the close beneath the short-term support line. So, again, moving forward, this is a good example, and it's sort of like all we can ask when we're doing short-term analysis like this. The initial bounce off of a technical level, and then something might happen after that, and we never will know. But this is a good example of getting direction, and getting the direction right, but the scale and the amount of pips in the move is not to be determined, and something that we'll never know. And so in this case, I made 40 pips, and then the pair broke below. It was a good sale. But then if we go back to the old, and I should have left the lines on there. Let me go ahead and draw the trend line that I was using. And going back to the previous example, this is the trend line that I was using. The previous entry, which was down here, this is a trade that I mentioned in one of the reports, and that I also sold after about a 50 pip gain as well. And we could see that the pair rallied some 600 pips after that point. And missing a trade like that used to be incredibly difficult for me. It's one of the most difficult things to handle psychologically. When you exit a trade a little bit too early, and had you held, or had you even just get hit by a bus or something like that, you would have made an additional 400 or 500 pips. But that, with experience, you learn to get over those things. So I missed a huge rally by selling a little bit too early. But last night, I locked in those gains, which were then evaporated. So everything all evens out on the end, and when you get more trades under your belt, you're able to walk away from trades a little more easily, as well as not be psychologically devastated when you did sell a little too early, as what did happen in that initial bounce off the backside of that former resistance line, which then acted as support. The next chart is the dollar yen, and same thing as yesterday. This is the daily chart, and I'm just looking for a possible move back to the resistance line on the daily chart. Not much has has happened for that. Kiwi dollar, again, kind of taking that off the radar screen. This is the Aussie CAD. Once again, the pair is in a clear range, according to John Kicklider's reports. He's been spot on. And moving forward, again, look for a move. I'd pay attention to this pair on any move below that 79 figure, and looking to play this range, because as John mentioned in his report, it's a great opportunity here in terms of you have a ton of volatility, but a very clearly defined range. And also, somebody mentioned on the forum yesterday, the spread is rather wide on the Aussie CAD, and certainly at times it can widen considerably. So when that does occur, my advice would be to just pass on the trade until the spread contracts a little bit, so you can have a more favorable risk-to-reward ratio. The last chart is the pound dollar, and this is a trade that I was not in yesterday, but I did mention yesterday this short-term support line. Prices got within a hair of the support line. We can see the subsequent rally off that support line, but again, it really depends on how aggressive you were. This was about, let me see here, about 25 pips above the support line here to get an entry on this trade. Hopefully you out there did participate in it. Personally, I didn't. I was waiting for prices to come down a little bit lower, which they did not, to actually touch the line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening. And just one thing that I did want to mention, this will be my last DailyFX walkthrough for a little bit. I am going to Maui for 2 weeks to sort of detach. I watch every tick for about 6 months, and then my brain needs a little rest. So I will be in Maui for the next 2 weeks. I'm going to try to put together a report probably the first night I'm there, but after that I will be away. The reports will be back on the regular schedule beginning December 8th. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.